with your analysis, what do you feel this is actual value,
Right.
and how much do you have to go over that to win the property?
So we are live and we're meeting with Sal Morabito, Newington's native, owner of LENDirect, who's been in the business for almost 30 years.
Yep.
I think you've owned LENDirect for almost 20 years.
Yep.
And you have offices in both Berlin, Connecticut and Sarasota, Florida. So thanks for joining us,
Yes.
Sal. Yeah.
Thank you for having me.
Yeah,
Pleasure.
of course.
Yep.
Thank you again, Sal. He jumps into our meetings every once in a while, which we value very much. So, Sal, give us some background on yourself and why you've gotten into the business. And
Sure, absolutely. Thanks. That's a great question. So my family was in real estate. When I was a young teenager, I was always exposed to investment properties, buying, selling, looking at how that impacted, financial wealth. I went to school for engineering. I found it fascinating, but it didn't give me a passion for a career. When I combined the engineering mindset with real estate, it led me to mortgages. From nearly 30 years ago, the rest is history.
yeah, well, you do a really, really great job of it, seriously.
And what led you into the mortgage industry and then owning LENDirect? How did that come about?
Well, I wanted to learn as much as I could in the industry in the 90s, and so much has evolved since then. I went from a small company, I went into corporate. That taught me a lot about structure. But one thing remained consistent throughout the beginning of my career, and that was I always had to follow it the way they wanted it done. And I found that that wasn't always best for my consumers. So if I wanted to pivot or change strategy, it was nearly impossible to get done at a big company. That was the clue that I had to do my own thing so that I could benefit my customers the best and put them in the best position for their financial future.
Got it. Interest rates, right? That's a hot topic right now.
Sure.
And they're very volatile. So interest rates, they're generally made up of a buyer's credit score,
Yep.
debt to income ratio, the type of financing. In general terms, where are interest rates right now and where do you see them going by the end of the year?
So we're hovering in the upper sixes right now on a 30-year fixed and mid to low sixes on a 15-year fixed. And that has recently changed in the last couple of weeks. So a month ago, we were about 0.5% less. So the market is extremely volatile. That's the only thing we know for certain. The market is volatile. So it will go up and down with economic factors like job reports that are coming out, tariff impacts. Although it didn't directly influence mortgage rates, it just created a volatile atmosphere.
Yeah.
And then that atmosphere translated into uncertainty.
Sure.
And that's changed interest rates. They have settled a little bit. And I do expect them to go lower at the end of this year, but I don't want to rely on that anticipation because the pros have been wrong in the last couple of years.
Sure.
We were supposed to be lower and it didn't happen.
And that conversation that we have with buyers is always difficult. They always ask us, where are the rates? What do you see them doing? So it's a really tough conversation for us to have with buyers.
Right.
And to give them the confidence and listen, this is just a rate. You're just locking it for now. We hear that term, date the rate, marry the house,
Right.
date the rate, right? We hear that a lot, which I'm not crazy
Terrible
about,
term.
but it is, it's true. And to have somebody like Sal, who is able to have an in-depth conversation, get into the psyche of the buyer, what their needs are, what they're really looking for, I think is super beneficial because there's a lot of lenders that just say, well, this is the rate, this is where we are, this is what it's going to cost you.
Here's your pre-approval.
Yeah.
Call
Sal
me when
will
you
go,
find a house.
This is the rate, this is what we're looking at. Here are your options. This is what we foresee. This is what we've come from. This is what could happen. And he's really analyzes and breaks down, and buyers eat that up. They love it.
And it's very helpful.
Yeah.
Certainly.
Yeah, so I feel that it's my job to educate. The first and foremost is the more education a buyer has, the more confident they are in their process and their abilities. So it's my job to bring that to the table.
Especially with a first-time home buyer.
Oh, first-time home buyer,
Just getting
yes.
into this crazy market.
Yeah.
And there's a lot of information that's not entirely accurate that people will generally start doing research online. Calculators are wrong. One program is not a one size fits for all.
Sure.
So we really have to look at what their particular situation is through a comprehensive analysis of where they are, what their goals are, and then put the right strategy in place to make that a reality.
And that's the one thing, or that's the one of many things that we actually love about you, because you get into the whole psychology of buying and winning in this
Correct.
competitive market.
Correct.
Not only that, but he's got the tools to help when it comes to making an offer and determining, hey, where do we have to be, right, to be competitive.
Sure, sure. When 70 to 80% of our deals are highest and best situations, having that initial consultation and working as a partnership between you, us, and the buyers is very helpful. And some of the tools like your bid over ask program, in addition to our traditional market analysis and some of these online algorithms, I find extremely helpful.
And the reason why is because a lot of times we'll do our market analysis and we'll tell a buyer, hey, you have to go 50 or 100,000 over asking price.
Right.
And they get like, they look at us like, are you serious?
Yeah.
And to confirm our analysis, we lean on Sal, who has a tool that says, well, look, this is the algorithm. This is a new tool that I have. This confirms that Dan or Eric's or whoever the agent is, their analysis on where this could end up.
Right, because let's face it, that list price becomes gospel to many buyers, right?
Yeah.
So talk about that a little bit, how we get beyond that.
So I like to communicate to our buyers in a way that they understand in their world. Okay, so the first thing that I like to do is, we're all familiar with a term called sticker price. And I say that the list price is really just a starting point. It's the sticker price. And that's where it enters the market. What other people are willing to bid on this property really indicates the true value to several buyers across the platform, and you want to be among them in order to be able to win the property that you want.
Sure.
So once we understand the purchase strategy, we understand the sticker price as a starting point, we want to look at, if you're bidding over the sticker price on a property, where are you down the road? How much over? What is the appreciation rate on this particular home? And where do you sit 5 years from now? If you wait to time the market and you're not in it, time doesn't work for you. It works against you.
Yeah.
And I love that, because if a buyer can see that they're, through these tools, that their break-even point maybe 1 year or even 2 years, it's a lot easier for them to create a winning bid and move forward on that offer.
100%.
Yeah.
Generally speaking, where I see the market, and this is statistically across running dozens of these reports, even in a recent short period of time, statistically it's about 2.5 years break even. And that's looking at a $50,000, $70,000, $100,000 over an average price of $400,000 or $500,000. They're seeing that return on investment in less than 3 years, and where they are in 5 years, it is phenomenal, because
that's invaluable information for a buyer.
well, it's ownership leverage.
Sure.
It's ownership equity.
Yep. It
Love
just
that.
gives you a ton
Love
of
that.
confidence as a buyer.
And the other thing that I love is your reputation in the industry. You've been doing this a while, right? We work with you for a reason.
How important is that right now?
Right, and when we're dealing with especially some listing agents that have experience in the market, when
And
we're
they're doing their due diligence and
Yeah.
calling the lender and want to know who's going to be providing the financing here. We don't want some Joe Schmo or...
Yeah, and we're taking a team approach, because of course we're reaching out to the listing agents,
Right.
but you're also reaching out to the listing agents. And when they find out, for those that have been in the industry a while, that you're on the mortgage side of things, it makes our job a lot easier.
I don't want to just be the person that tells you what the strategy is, and if I can impact it and give you a better shot at this, then I want to be involved. And my reputation for nearly 30 years right now is, if Sal has approved it, and if it's gone through its due diligence process, that's equivalent to a cash offer. That's money in the bank for the seller, which sellers want certainty, right? They want to know that that's going to happen. When I pick up the phone and call up a listing agent to let them know our offer, our buyer has received a certified pre-approval, that means they've gone through underwriting, they've submitted all their documentation, we have an approval. We are now waiting pending title and possibly appraisal, not always required on that, but it lets them know they've gone through the due diligence process. And this has been my mantra for nearly 30 years. So when we're dealing with listing agents that have come across the LENDirect name, they're like, it's solid. And that's a benefit that is really a strong point for our buyers.
Sure.
And if by chance they haven't come across the LENDirect name, once they talk to Sal and understand and the way Sal's demeanor with these agents is, and how calm and confident he is with his delivery, I mean, it just carries so much weight.
Absolutely. A couple things that you do that I love is not only do you talk about the buyer's financial strength and why this is going to be a smooth and seamless process through to the closing table, but you're also proving to the listing agent how quickly you got mortgage commitment into the closing table on the last 5 transactions.
I have an example of one situation that happened, I think last year in Vernon. It was with a buyer, and I said, we were using Sal, we submitted our offer, and Sal goes, okay, I'm gonna call the listing agent. And he calls the agent, he calls me back, goes, Dan, we're short. I know where we need to be. I talked to the agent. We actually gave me a couple of good tips and pointers. We should really increase our price to this. I already talked to the buyers, they're on board, revised the contract. So I'm like, wow, like you kind of just did my work for me.
Yeah.
But that's the added value that Sal brings to the table.
Right.
You know, he'll dissect.
That's a testament to both you and Sal.
Oh yeah. I mean, and the buyers were obviously thrilled.
They're thrilled because when I'm communicating the strength of our buyers to the listing agent, I'm also asking questions like, is there anything that we could do to accommodate your seller?
Sure.
How close are we? Are we in the running?
Yeah.
So in many cases, not all, but many cases, listing agents are willing to tell me a little bit more.
If you don't ask, they won't tell.
Right.
Right, and it's coming from several angles. So it's all designed to make our buyers win.
Yes,
You know,
definitely.
so-
And to do that from both ends, from the mortgage side and the real estate side, the listing agent's like, okay, these guys are serious. They really want to get this done. I have confidence in them.
Absolutely.
So just knowing how competitive this market is, we at the Burgio Sousa Team make it almost mandatory to have a buyer consultation with a new buyer that comes to us, whether they're a first-time home buyer or a seasoned buyer, because even a seasoned buyer isn't familiar with what's going on in today's market. So
Right.
we like to bring them in and have that consultation. What does your buyer consultation look like when you meet with a
Right.
buyer for the first time?
So the first part of that is having them understand the mortgage process. Once they understand the semantics of that, along the way, I want to give them some little mortgage hacks. And so to make their experience a little bit easier, a little bit more knowledgeable, more confident. One of the hacks that I tell them, because the question of where are interest rates, how are they affecting? One of the hacks is look at the 10-year treasury bond. The 30-year mortgage is closely tied to that. It's typically 2.25% to 2.5% above the 10-year treasury. 10-year treasury increases on a daily basis, so you can see you have a metric to follow on your own without relying on some information that you may have right or not. You have the metric to follow yourself. Rates go, market goes up, follow that 10-year treasury. That comes down,
That's
rates
a
have come down.
great hack.
Sure.
Yeah, for sure.
What does that process look like when you're meeting with the buyers for the first time?
So the process is we talk about the certified approval, and then it's about the buyer strategy. What are you going to experience out in the market? When you're bidding in a property, we want to use our tools to remove the emotional competitiveness when they're doing that offer bidding. And one of those is the bid over ask tool. The second thing is when they actually translate, oh, I'm going 20,000 over, I'm going 10,000 over, I'm going 50. Well, for every 10 grand, it's only like $60 difference in a monthly payment.
Sure.
So are you willing to lose a house over a smaller amount on payment? Now, I recommend, hey, buy what you can qualify for, and if this still fits the metric for you, you can feel confident moving forward and know what that difference is to you.
And really in this market, that's kind of what it's all about, right? Do you actually feel, it's not so much about what are you paying, because everybody's paying a lot for properties these days, but do you actually feel comfortable with the monthly payment, right?
Right. It all translates to what's your down payment and what's your monthly payment. Does that fit within your budget? And are you comfortable being in a scenario? And that's where the date the rate, marry the house comes into play, because you're not married to this forever. Typically rates go up and down in cycles. We are due for the downturn. We've been due for a couple years. So getting into a property now, getting in, regardless of where interest rates are now, your monthly payment will get better within a short period of time as your equity is increasing.
Sure. Yeah.
So some of these general terms, like for closing costs, like we hear roughly 3% for closing costs. Is that still accurate?
I always dive deeper with our clients on that. That could be a reasonably okay starting point.
Sure.
But since insurance and taxes and your escrow requirement is usually the biggest part of your closing costs. Closing costs are not just fees. Closing costs in my consultation, I always say, you have fees that you pay one time, right? And then you have escrows, those are always reoccurring. But you need this chunk to get into the house. It's under the umbrella of closing costs.
Sure.
Such an important conversation to have because these buyers are coming to the table with X amount of dollars, and to know that they need another lump sum at the closing is so. And there have been times when buyers are kind of sticker shocked at that number when they see
Right.
that closing cost. But when you have that conversation way in advance and you prep them for it, worst case scenario.
Education is key.
And I'll tell you something that's not that pretty. There are places that will have that appear lower so that it's can be misleading, and the
Sure.
surprise comes at the closing table.
Yeah.
Better to educate up front so that the
Definitely.
preparation is there and they're going to close on time,
Yeah.
as
Yeah,
anticipated.
agreed.
So as a general rule of thumb, especially for first-time home buyers, for those that want to transition from rental market into the purchase market, is there any baseline that we should be telling buyers, you should have at least this amount for a down payment, for closing costs, what should they feel comfortable with?
Correct. So that's part of our initial consultation. The initial consultation starts with where you're going to end up qualifying. So I just take a verbal, and then we're going to verify that through our approval process. But general down payment is going to start at 5% of whatever that sale price is. First-time home buyers can enter the market at 3%. And then you're going to typically look at, if you just want to have a rule of thumb without a consultation, I would use the 3% rule for closing costs,
Sure.
prepaids, and escrows, and then that's going to be your entry point into the marketplace.
Yeah.
Good.
And buyers can't lock a rate until, obviously, we have a contract in place, right?
Right.
And anything else?
So when someone says, all right, well, that's today's rate, I say, okay, I'm going to qualify you above this to give you a little bit of a cushion. Locking a rate says, I'm allocating this money tied to this property for this amount of time.
Sure.
We lock through the closing date with the property address in mind. Absolutely, we need a property address in order to lock something.
So a lot of buyers that are entering the market think that they need 20% to put down on a house, right? Obviously, that's not the case. How do we break that news to them, and are they generally surprised to hear that?
I would say that, they are mostly
Really?
surprised by that fact,
Interesting.
but it is not, people have a bad misconception about something called mortgage insurance when they're only putting 5% down or 10% down. And incrementally that changes with your credit score. If you have
What is
real-
mortgage insurance?
Mortgage insurance insures the lender for the balance after 80% if there was a default on the loan, okay? So it's protection for the lender.
Sure.
But it gives flexibility to the buyer. It allows you to enter the marketplace with less down. And if you've already done your part in having great credit, that mortgage insurance is dramatically less than what people perceive it to be.
Sure. And how do you get rid of mortgage insurance if you have it after you close?
Well, you're gonna either pay your mortgage down to 20% or less.
Yeah.
You're gonna have a lot more equity in the property. Or while you're paying it, as the equity rises, you can actually get a new appraisal, or when the time comes, you can refinance and get rid of that mortgage insurance. It's the valuation after you've owned it for a year divided by whatever the balance is at that time.
Got it. So anywhere from typically 5% minimum, sometimes 3% for
First-time home buyers, 3% down, right.
20% or greater is always the best if
Right.
you can afford it.
We have VA loans, FHA loans, most of them conventional, but those also allow low down payment options.
Got it. All right, we need to talk about a very hot topic in real estate right now, and that is appraisal
Appraisals.
gaps. Yeah.
Oh, that's, yes.
So,
that's a big one.
what, highest and best situations, we're trying to structure our offers the best way we possibly can to get a deal done, and appraisal gaps is certainly a part of that. So let's touch
Appraisal
on
gaps meaning a buyer is willing to pay a certain dollar amount over a short appraisal should the appraisal come in shorter than what they're offering.
that. Right.
So that comes into play because offer price doesn't always win the transaction.
Sure.
It's always terms. And appraisal gap comes into play. I would say in today's marketplace, appraisals, appraisal gaps, appraisal shortages is the hottest, biggest misconception that I encounter with buyers. So we get them to the point where they understand if you are doing, let's say, 10,000 or 20,000 over what it appraises at, what does that mean for you in dollars and cents? and it's usually dramatically different than what they perceive it to be.
Sure, there's definitely options for buyers. Let's take our recent deal in Avon, where the
Right.
property actually underappraised by, I think it was 50 or 60 grand.
$60,000, right.
So the first thing a buyer thinks is, oh my God, I got to bring an extra $60,000 to the closing table, which is certainly not the case.
Right.
Right.
And it proves to the point that people perceive that to be the case. And between the time when that appraisal came in and that 4 hours until I talked to him, he's like, oh my God, I was worrying. I go, no, you don't have to pay the difference. Number one. So scratch that thought.
Yeah.
We're looking at loan to value and saying, how much do you want to bring more money? If the answer is no, does it still work? Most of the time it does. So in this case, it was like, if you want to bring a little bit, you can bring a little bit, a percentage of that difference.
Sure.
And it was like roughly 10 grand.
Yeah.
Now, if you didn't want to bring that, he had the option to have mortgage insurance and not change a penny out of pocket, and the mortgage insurance would have been like $30 a month.
Got it.
But he's not losing the property nor paying that extra.
So
That is
the
such
option
good
is bringing all of it, some of it, or none of it if you want to play around with mortgage insurance, potentially.
Close. But you can keep your percentage down, like 20% down, and keep that on the appraised value or the property price that's on the contract.
Sure.
So you have a lot of choices in between.
Got it. All right, last question. After a buyer applies with you, or any lender for that matter, what should they not be doing, right? Like,
Yeah, there's a whole bunch. As once they're going through our certified pre-approval process, keep in mind that is they're submitting all their documentation. It goes through underwriting. We have a full tri-merge real credit report. It's not a soft pull. By the way, you can't get a real approval with a soft pull credit. You need a real hard inquiry to get a full approval.
Right.
With that, they get a tips sheet from us. On this tips sheet, as they're shopping and they're getting excited, they may take the next step, either before they secure a home or after they secure a home. Don't go car shopping. Don't modify your debt in any way. Don't buy that furniture because you were looking and you want to get that under the sale price or the special financing, because now it has to go back to underwriting.
Don't deposit that sum of cash under your mattress into
Right,
the
right,
bank.
That's another top mistake.
no Maseratis, no sleep number beds.
Right. No, you can
Just
do
keep
whatever
a
you want
low
after.
profile.
Right.
After you close on the house, it opens up for you again.
Right.
Or don't do anything without checking with your loan officer, right?
That is what it's really all about.
WWSD.
We are.
What would Sal do?
What would Sal do?
Oh my God.
That's a good one. Yeah, no,
WWSD.
that is a good one.
I'm like, what is that?
What would Sal do? I'm gonna tell you what. We are with you throughout the whole process. I don't expect you to retain everything that we tell you, but we're there. We're a phone call away to give you the right direction that you may need at any
If you're
part of
not
the process.
Sure, you check with the lender.
Just call me.
Well, this has been a lot of fun. We might make this a quarterly thing.
Absolutely.
Right?
That would
And
be fantastic.
If you guys have any questions about any of the mortgage process, or certainly if you want to get pre-approved, contact Sal Morabito and LENDirect, and we'll have the link below.
Thank you again for having me.
Thanks for coming.
Pleasure.
Thanks,
Great.
Sal.
Awesome.
Appreciate
Thank you.
it.
Yep.